What's going on, everybody? Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to get you prepared for this week's trading and also inform you on how I'm approaching this and what I foresee the rest of this year. So, without further ado, let's get started with the S&P. And the fact is, we are in a 7-day downtrend, and I'm referring to boom right here, June 9th. Start of a new downtrend, gap down, consolidate, gap down. This is very ugly, right? And we've been bearish this market for quite some time, and we've had really only 3 uptrends this year. We had one back here, short-lived in January, the start of February, again in March, and then just recently towards the end of May. And then we've had plenty of chances to protect capital. Here, downtrend, 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 downtrend. So essentially 4 major inflection areas of where you could have protected capital. And what I'm expecting now is I think, we're ripe for a bounce. We are very oversold, but we're not getting that capitulation flush that we would like to see, or most people want to see in this type of bear market. And the VIX is just kind of chilling. It's hanging out. We haven't seen a VIX above. I think the saying was we've never came out of a bear market without the VIX at least hitting a 40. So yeah, I think we could see this pattern of continuing to grind sideways, have a couple relief rallies and then make new lows, because I don't think this is it. I don't think this is the end all be all. This is the bottom and now we're ready to rip back to new highs. Just not the type of market environment that we're in. So this week, we're pretty far deviated from the 10 SMA. We have some gaps above on the SPY, right around 390 roughly on SPY. So some gaps above that could easily come back and be filled. We've seen some massive rallies and some massive moves of 10-20% and some of these really beaten down names in the past, just recently. So it would not surprise me if this week we see some sort of rally just to fail once again, to make new lows again. So not predicting anything. We're riding trend. We're in a 7-day downtrend, and the number one priority, as always, is preserving capital. And if you have them year-to-date gains, so right now that's the trade, is preserving capital. And a lot of people want to get aggressive and start shorting these downtrends. And then by the time we actually have some sort of bull market again, or at least a sustained uptrend, your trading capital is a lot less than what it would have been had you just protected capital and waited for higher trading odds. So what am I doing? I'm definitely protecting capital and waiting for the next uptrend. And in the meantime, I'm doing 5-minute RT short and 5-minute RT long with day trades, reading the tape. And that's not for everybody. And if I am taking those trades, it's with much smaller size, and the majority of my capital still in cash, waiting to be able to put on some larger size positions for the next uptrend. But until we see prices back above this cloud, things don't look great for the overall market. So be cautious, be careful. This week I do think we could potentially see some sort of rally back up into this 10 SMA before the following week, maybe rolling back over, going into the end of July. So keep an open mind. I'm not predicting that. I just think that's the most likely scenario. That's the probably most high odd trade, because that's what we've been seeing ever since we broke trend back in early January this year. So be cautious. Patience. I can't preach it enough. And protect that capital. We're going to have better odds eventually at some point, and we need trading capital to be able to capitalize on some of these massive trades. And if you're somebody who's taking a longer term approach in protecting capital, there are going to be massive buying opportunities across the board in all asset classes, in my opinion. So protecting that capital is of the utmost importance. Not losing money is the trade right now in this bear market. And then being patient and waiting for that next uptrend. And when we hit it, deploy capital. So let's talk a little bit about the rest of the market. So bonds were interesting. TLT. So this has just been getting destroyed. But you can see we're putting in some new lows. And if I was to pull up some momentum indicators, you would see that we're printing bullish divergence. So TLT could be in store for some sort of rally. Not predicting it, but this looks to be setting up. Bitcoin and Ethereum, yeah, they still don't look great. We came back down to below 20,000, a level everybody was eyeing. So yeah, we did come as low as roughly 17, 18,000 on Bitcoin. Is this the bottom? Who knows? We're in a massive downtrend. Do I think these are good buying opportunities if your time horizon is more than 3 years? Yes, I do. So all depends on your trading style and your investment time horizon, and if you have the liquidity and spare cash to deploy. Right? Not everybody's situation is the same. Ethereum, similar situation. Everybody was eyeing, this was 1,000. We came down to below 900 actually. So is this the bottom? Same story with Bitcoin. Who knows? We're in a massive bear market. We're in a massive downtrend, and these things can go lower. So if they do, if you have capital and your investment time horizon is, like I said, more than 3 years, I think these are fine areas to be dollar cost averaging and accumulating some of these levels. One thing I want to talk about is energy. Yeah, energy got destroyed this past week, breaking trend, gapping down. And this is not looking great. When we break the 50-day moving average, our priority becomes not only protecting, but maybe even hedging if you're in this trade. Obviously, you guys know we have been heavily involved in energy really since back when we broke out back in early January. So we've been in this energy trade. Energy has been on the trading playbook. It's been in our investment portfolio. We've crushed this. But yeah, one of the levels I'm watching now is, this pivotal low, right around 71. If we lose 71, I think this could get much uglier. But yeah, so far, still a higher low, but we're breaking trends. So we're definitely going to be taking a look at the investment portfolio this week and currently how we're allocated and where some opportunities may exist. So pay attention to the playbook this week. Let's see, last thing I want to talk about is the NASDAQ. Tech actually isn't, we had this level. I said it's really tough to short these lows. And yeah, you can see it is tough to short these lows. The got paid on the day that it triggered. And then, on Friday, OPEX, day that I rarely ever trade. We closed back above that trigger price. So this is difficult. 1 second. This is difficult trading down here. And like I said, we could easily see this week come back and fill some of these gaps above on the NASDAQ. And it's tough to be swing short in this type of market environment. And these trades that I post on the playbook are for aggressive traders only. All of you should be preserving capital and waiting for this next uptrend, whenever that may be, because that's what I'm doing. And that's what the methodology really preaches, is staying on the right side of trend, getting long in uptrends, early in uptrends, scaling. And then once you've scaled some profit, moving your stop up to your entry so you have a risk-free trade. So yeah, this week, I'm not going to be doing a whole lot of anything. Markets closed on Monday. Tuesday, we're open, and I'll be traveling the majority of this week. So yeah, probably won't be too active. This isn't a time to be active anyways. So nobody should really be trading too heavily. Nobody should be really to be looking to short because we're at extremely oversold levels. But you can't get long because we don't have rules to get long. We need to get back inside this cloud before we can have that type of trade. So this is a no trade week for me, right? Until one of these two things happens, until we can get back above this 10 SMA with RT long on a daily time frame and uptrend, that's when I'll deploy capital. If we do get back near this range and we fail, I'll be looking to take a 5-minute RT short and maybe try to scale and move my stop to entry and see if I can ride this back down in the next couple of weeks. So this week, not doing a whole lot. Like I said, I'll be traveling. And I don't think anybody should be doing a whole lot anyways for the reasons I just explained. With that, I'll see you guys next week. Take care.